All right, let's jump right into a question that seems like a total paradox. We hear it all the time. The US national debt is just skyrocketing. But at the same time, the US dollar is still the most powerful currency on the planet. So, how on earth can both of those things be true? In this explainer, we're going to break down that relationship, this fragile pillar that connects America's huge debt to the dollar's superpower. I want you to just look at this number for a second. 156%. It's a pretty startling figure, right? Well, this is the projection from the Congressional Budget Office, the CBO, for where U.S. national debt is headed in about 30 years. But what does a number like that even mean?
Well, it's what's known as debt as a percentage of GDP, or gross domestic product. The easiest way to think about this is to just imagine your own finances. Your GDP is like your total salary for the year. The debt, that's everything you owe, your mortgage, your car loan, all your credit cards. So a debt to GDP ratio of 156%, that's like owing 1.5 times your entire yearly income. It's a really important snapshot of a country's ability to pay its bills.
So first, let's really wrap our heads around the sheer scale of that number. The CBO's report doesn't pull any punches. A debt level this high would actually be worse than the record peak we hit right after World War II. And the warnings are crystal clear. This isn't just some abstract number on a spreadsheet. It poses very real risks that could crowd out investment from the private sector and actually slow down the whole economy. That has real-world consequences for all of us.
So that brings us back to the big question. How can the U.S. possibly sustain this kind of debt without a total collapse? Well, the answer is pretty fascinating. It all comes down to the unique power of the U.S. dollar. It's the pillar holding this whole thing up. To make this super simple, let's use an analogy. I want you to think of the US dollar as the English of money. You know how English is kinda the default language for international business, for science, for aviation? The dollar works the exact same way for global trade. Most of the world's most important stuff, like oil, is bought and sold in dollars. What that does is create this constant, massive global demand for US dollars, no matter what our economy is doing back home. And look, this isn't a new thing. As the Council on Foreign Relations points out, the dollar has been the world's main reserve currency since the end of World War II. That just means other countries literally hold huge stockpiles of dollars in their central banks because they see it as a safe and stable place to park their money.
So what's the secret sauce? Why is the dollar so dominant? It's really a mix of things. It has a history of being stable, the US economy is just massive, and of course, there's America's geopolitical influence. But here is the most critical piece of this whole puzzle. The world sees US government debt, treasuries, as one of the absolute safest investments on Earth. That deep, trusted market for our debt is exactly what lets the US borrow so much money so cheaply. Okay, so that's the pillar, the dollar's incredible global power. Now, let's talk about the weight that's being piled on top of it. What exactly is driving this debt to grow so fast? According to the CBO, the growth isn't happening everywhere equally. It's actually really concentrated in 3 main areas. The biggest drivers by far are spending on healthcare programs like Medicare and Medicaid, and then Social Security. And here's the kicker. As the total debt gets bigger, that third category, the interest payments on the debt, it just keeps growing and growing. It creates this vicious feedback loop. Now, the fundamental reason for the growth in those first 2 huge buckets is pretty simple: demographics. The population is aging. That means every year, more and more people become eligible for Social Security and Medicare. So it's less about new, flashy government programs and more about the rising costs of promises we've already made as the country's population gets older. So we have this incredibly strong pillar, the dollar, and this ever-increasing weight, the debt. What happens when that weight becomes too much for the pillar to handle? Well, that's when we get to the tipping point. Let's use our second analogy here, a national credit card. Because of the dollar's power, you could say the US has the world's best credit card. It has a crazy high limit and super low interest rates. But the balance on that card, the national debt, is climbing to levels we've never seen before. At some point, the lenders, who are basically other countries and big investors that buy our debt, they might start to get a little nervous. They might start to wonder if that balance can ever really be paid back. And if that confidence starts to fade, they could demand higher interest rates for the risk they're taking. This brings us to a really dangerous concept that economists call fiscal dominance. This is basically a nightmare scenario where the government's debt gets so big that the central bank, our Federal Reserve, loses its independence. Its main job might switch from keeping inflation low to just helping the government pay its bills, maybe by, just printing more money. And that's the ultimate risk here. If the rest of the world starts to believe that the US is just printing money to cover its debts, the entire foundation of the dollar's value starts to erode. That loss of confidence is what can lead to higher inflation, because every dollar just buys less. And all of a sudden, that strong pillar we've been talking about, it starts to crumble. So, as you can probably tell, this is not a problem with a simple, easy fix. The path forward from here is really all about a series of very tough choices and trade-offs. On one hand, we could just maintain the status quo, keep borrowing to fund everything. But the CBO report makes it clear that this path risks a slow decline in the dollar's value, or even worse, a sudden financial crisis. On the other hand, the alternative is to make some really politically painful choices about spending and taxes right now. That could stabilize things in the long run, but it might also tie our hands when we need to respond to the next crisis, like a recession or a pandemic. There are no easy answers here at all. And that really leaves us with the core challenge. We've laid out the problem, but the solutions, they are fiercely debated. This all raises two huge questions we should all be thinking about. First, what specific hard choices on spending and taxes would it actually take to get off this path? And second, if the world did start to move away from the dollar, what could realistically replace it? That, right there, is the multi-trillion-dollar question.